Morning all. How are we all doing? Morning Stevie, morning John, morning Alex, morning Martin. Always sunny here in the south of Spain. I know, very nice. Beautiful sunny day in the UK. It's very nice today. Yeah. Finally. We might actually stop the hideous weather. Morning Dreska, morning Virginia, Joaquin, Connor, Silver. Same as gold. Morning Danny. Morning Diamond, morning Gumani, morning Tim the Money. Just back from Easter holidays. Blimey, that was a long one. Easter was ages ago. Seems like ages ago I ate those eggs. Still trying to get rid of them. Right. Let's have a quick look at news today. So, yes, this morning, or rather last night, overnight, we had the New Zealand dollar CPI come out, 1.2%. So inflation has dropped in New Zealand. So if we have a look at the impact that's had, we are sitting at 6.7% with a 0.5 drop. So that's come down a fair bit. So it's still lower than the Australian, which is what we were looking at yesterday, the potential impact. But we have now dropped below the European interest rates. Inflation figures. So that's had a little bit of an impact on the buyer's scorecard between the between the New Zealand dollar and the euro. So that's taken it a little bit more neutral. So it's currently a very weak buy, but that's mainly because we've got retail at the moment all shorting it. So the bias is to long it. So when retail come out of those shorts and start to go more back to 50-50 or start longing it, that will come out of it. So +4 is the maximum you can get on Euro New Zealand now. So, and with New Zealand dollar, US dollar, -5 is the maximum sell you can get, unless COT changes at the weekend. But so not a massive impact off of that. It's had a big impact on the New Zealand from a, sorry, that's the new indicator I've been testing. It's had a bit of an impact on the New Zealand dollar in the fact that we had a big drop on the news. So there's not any ADRs. Well, there is ADRs. They're only 100% ADRs though, so they're not huge pushes. We got 125 on the Aussie New Zealand. So New Zealand dollar CAD, you can see there we had like half an hour roughly of drop. New Zealand dollar Swiss, that was a little bit of a stronger drop. We've got a bit more of a weak Swiss franc at the moment. So that was an ADR. So we'll have a look at all the ADRs in a minute. New Zealand dropped. New Zealand US dropped. So as you can see, everything's kind of done the drop. So all these gap fills are in play this morning. So if you're doing ADRs, how long we got until the open? 4 minutes. We'll quickly whiz through the ADRs. Aussie New Zealand, that's one to the upside. I've scaled out a couple of those this morning. Beautiful reversal alert there. You can see I've just taken another sell there. So yeah, really, really nice potential short back to fill that today. So that's a nice looking short opportunity. Euro New Zealand, that one's already started to play out. Short is there. So looking for that to drop back down into there. Pound New Zealand. Again, nice reversal up at 100 ADR. That's coming down already. I've got shorts on these and other places at the moment. I've got a short on down there, so didn't take that one because it's too close. But your reversal on that there. So you're looking for somewhere around about 1/3 to half an ADR, so sort of 60 to 80 pips, only down into that propulsion gap. That's Pound New Zealand. New Zealand dollar Swiss. Nice reversal alert, just got in there. Potential push back up into here. And New Zealand dollar yen. So same thing. So they've all pushed down and started to move basically. Morning Adrian, morning Baggy. So yeah, so basically they're all good mean reversion opportunities. The news on it basically that we've dropped on inflation is it's negative in the fact that basically it takes the pressure off of interest rate rises. However, as you can see with the New Zealand dollar, the last interest rate rise was a 0.5. So it was one of the biggest interest rate rises, and it took them to the highest interest rate basically there at the moment. So what that means moving forward is that it can take the pressure off of this, because inflation is starting to come down at a decent rate. Their unemployment is ever so slightly creeping up, which is because of inflation. So it's another reason to drop the inflation figures. And their GDP has been dropping dramatically. So they want to get on top of this as fast as they possibly can. And they've done a very, very good job of it. But that means we're probably going to see, I would say, a 0.25 increase as a max on that. However, it could be that they could go with a 0. So we haven't got any information about forward guidance on that at the moment. So we'll see what happens. So I'm just going to take a quick... I'm just going to take a manual trade this morning with the Price Action Toolkit, because I'm not set up with the ORB on this account. And I just want to see if we can get a decent move out the DAX this morning. So I've just gone short one there before the open, which isn't great. Eek. Didn't mean to do that. Wasn't expecting it to do that quite so fast. So hopefully this drops. Just going to trail the stop loss down. Just to reduce risk on it. We're down at this kind of pre-market low, although this is broker data, so target's down there. Okay, risk-free trade. See if we can get that quick 1.5 hour. That was close. Nearly stopped out on that. Come on, hurry up. I've got stuff to do. I'm just going to take that off. Quick profit. It's struggling there to get any lower on that cash balance. So I'm just going to cancel that pending off on the long, because it might it might carry down. I don't want to get triggered into that and then reverse on it. I've just made 0.2%, so I'm just going to leave it there. So what's talking about? New Zealand dollar. So yeah, basically the New Zealand dollar, obviously we don't think the interest rates really are going to go up dramatically more now. So we might see some weakness starting to creep in on that New Zealand dollar moving forward. So that's all good news for the New Zealanders, rather. Not great for the currency, because obviously it takes the pressure off it, but it is still the most attractive currency to hold money in overnight at the moment. So we will still see some strength in there. The US dollar is likely to go up 0.25 to 5.25 to match that. And as soon as they go flat and the US dollar gets to 5.25, these are still the strongest two out there at the moment. So the pressure, however, has been taken off the New Zealand dollar now, for interest rate rises, that is. So today we have unemployment claims for the US dollar. So that's the main news that we've got today. Macklem is speaking at 4 o'clock as well this afternoon. So there's potential movement on the US dollar and on the Canadian dollar today. That's an important one, the unemployment claims, because it's a precursor to the unemployment rate. So it gives us an idea as to what's going to happen with the unemployment rates, which is obviously what is one of the leading indicators for changing inflation. So that's an important one this afternoon at 1:30. That's pre-market. So just be aware of that with your US dollars. Kennelly morning. GJ Bella. I'm going to cover that in a minute when we do the RSIs. Just wanted to quickly go over yesterday's trades. So the ADR reversals yesterday did 0.24%, just 0.25% yesterday. Nothing dramatic. Sitting in 1.53. Swiss yen is the only thing that is got 3 positions on at the moment there. So one of those is in profit. So there's no drawdown. Nothing anywhere near danger zones. We're in 6.7% on the H1, banked 0.5% today so far, banked 1.2% yesterday. Again, nothing at 1% at all there, so there's nothing that's getting into any danger zones. H4 had a loss day yesterday, 0.3%. And 0.1% down on drawdown control this morning on the New Zealand dollar Swiss, because it's gone the wrong way on the New Zealand dollar Swiss. That's sitting in 2.2. We'll probably bank some. Pound New Zealand might actually revert, but yeah, it's just sitting in 2.2. 13.8% on the hedging set file. That did 0.6% yesterday and has done a 0.4% drawdown control this morning. So a bit of DD control being done on that hedging one. So the hedging set file obviously is an experiment at the moment to test how this is working. This is a forward test. So I've done back testing on this, which all looked good. As I said, the drawdown control is a lot more on hedging strategy because you are getting in literally just because there's been a reversal alert. That doesn't mean it's going to go. So you are going to get into more drawdown because there's less strategy involved and more of a risk management and risk accumulation and money accumulation type strategy. So this is what I'm testing, is basically what the max drawdown gets up to. There's nothing in here really still that is worrying though. So 1.23% on the Aussie New Zealand. We've got 1.29 on the Euro Yen. New Zealand dollar Swiss is the only one now that is getting to the point where I would enact drawdown control on that. New Zealand dollar Swiss at 2.64%. So if we have a quick look at that one. Where are we? New Zealand Swiss, there we are. So New Zealand dollar Swiss, obviously, is there an RSI on there? We've got an RSI on there. Let me just change the color of the break-even lines. Okay. So your short is in profit at the moment. As you can see, it's done a little bit of drawdown control there on another long, but there is a profit on the short. It's only got that one position on there, so it's gone short, obviously, on that reversal alert. So the actual average on it from where we are at the moment is 884. ADR on this is 51, so it's 1.5 ADR away. So it's not actually very far away from getting out of the position. It's only going to take a couple of good strong days in one direction to get out of that. But as you can see, it got in up here, and obviously since then we've just done a push accumulation, little price discovery accumulation. So this is what happens with the hedging set file. You've had like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of accumulation and 3 days of movement. Nothing you can do with it. You just have to sit through these. But it's at 2.64%. So it's done quite a good job on the drawdown control. Obviously, it's been banking along the way. But this is kind of what I'm keen to see with these hourly hedges. The old M5 hedging set file that this is based on used to use the RSI as a filter with 60/40. So what I'm considering doing is using the 14 RSI as a filter for initial entries. So basically just trade in both directions and just basically get in, but only when we've got a kind of extension. But then that takes it very similar to the H1M5 strategy. So, but I'm gonna test this forward test first. I want to give it a good 2 or 3 months and see what it manages to return, because it's returned like 26% since the test began. So it should do about 250% return a year. But I really am interested in this, what we get up to in a forward test on that. So it's got a lot of potential, but obviously there is a lot of danger in there with this as well. So just going to monitor that one. It's doing a good job banking, which is all good. Right, let's have a quick look at the DAX. So your opening range breakout on the DAX is short. So there is your pre-market 15. Your pre-market 15 has played out very nicely. Your 5-minute opening range breakout is also short at the moment as well. So glad I took that one off because that would have been a smaller profit. So that's breaking out nicely to the downside. So let's have a look at the DAX where we're off to this afternoon, even this morning. Low is basically here. Which is about 158.28. That's your low, which is also the high from that previous day back there. No, it's not, sorry. What's that low one? Yesterday's low, yesterday's high, yesterday's low. Why are those lines going left? Oh, weird. Did you see that? That all updated then. Now they're going right. Oh no. I think I might have found another bug. Weird. Anyway, so yeah, yesterday's low is your target and this propulsion gap to the downside. So this looks like is where we're headed. We've obviously left that in play as well, pre-market. So there is a target to the upside, but I would expect them to come back down and do these today. We've still got this gap fill. The other thing we need to bear in mind is there was some news on Tesla yesterday with negative returns. Earnings data has gone. Components. What's the date? 20th. Yeah, Tesla. So there. I forgot to mention. I meant to mention this on Monday, and I completely forgot. It's earnings fortnight, by the way. So we're going to have a lot of volatility on the indices. So the opening range breakout EA this is typically where it can make its money because there's a lot of volatility. So we had a big miss on Tesla yesterday. So obviously when you look at the stocks and the NASDAQ stocks, Tesla is number 8. So this is the weighting of NASDAQ stocks. So there's potential today for quite a big drop in the indices because that was a big miss. So the earnings, you need to keep on top of it. We had IBM yesterday as well. We had Netflix on Tuesday. We've got Amex, AT&T, and Blackstone, and PMI pre-market today as well. So we'll get some more volatile opens coming up. Next week is the big week. For earnings, we've got Google, Microsoft, Facebook, everybody basically. Next Thursday, look at it, Amazon, you've got this absolutely crazy. So there's going to be a big movements on the indices. So these movements that we're seeing on the DAX here will be to do with sector purchasing. So when we get lots of individual large stocks having earnings which are either big hits or big misses, what tends to happen is that sector will suffer. So for example, with Tesla, you will find that the energy sector and the motor sector will tend to suffer. So any indices that have a lot of motor stocks, like the DAX with the German stocks, BMW, etc., they will also be brought down at the same time. So what they will do is they'll start to scale in and scale out of sectors based on sector performance. And obviously there are key stocks within sectors that drive the stock market up and down, Tesla being one of them. So this is why we're seeing this sell-off this morning. I was expecting a sell-off, but not necessarily this strong in the DAX. So, but this is why this is happening, basically. So you'll find the same thing will happen on the US indices as well. This afternoon, we're likely to see a fair drop on the NASDAQ as well. And obviously that will drag down the other stocks as well a lot of the time. So just be aware of that over the next 3 weeks, basically. So earnings season typically lasts about 3-4 weeks. and it's every quarter basically. So, but next week is the big one. We got Procter and Gamble and SLB tomorrow, but those were the biggest stocks at the moment. Netflix also had a bit of a miss. So if you look at see the Nasdaq, their stock price obviously dropped a fair old bit. They were preempting that anyway, so just be aware with the volatility in the stock market is going to be higher than normal over the next few weeks. So there you go. That's a nice opening range break today. So the pre-market 5, which is the one I took, was a very quick and easy one. Your pre-market 15, let's just see what you got risk reward on that. Wrong way. Always go the wrong way. So you would have been somewhere around there with your entry and your stop, probably. There's your 1.5 hour. So very nice, easy 1.5 hour on that today. And it's still going. So there's your 15-minute opening range just gone in as well. So if you're trading the opening range breakout EA, there's your 15. So if we can pull up and break that low, just be aware of where we're headed today. So you are going to find some support at yesterday's low, which is there. See there. Just be aware of that. Failing that, if we break down from there, we're looking at 125 ADR for next support. So decent drop on the cards. Right, let's look at RSIs. So I'll start off with the hourlies quickly. The hourlies are all different to the 4 hourlies today. So CAD Swiss. CAD Swiss is nice extended on the hourly buy. I've just got into this one, as you can see. So M5 reversal was already triggered this morning there. So there's my entry. That was obviously the spread. So long on that, looking for it to pull back up into there. Nice extension on the hourly. M5 reversal alert. Very straightforward. These old gaps got filled. And it's off to go and do the next lot. So looking up at ADR potentially today for a gap fill there or there. Half an ADR on this is 21 pips. So target, that's only 17. So you'd be looking to get up somewhere around these lows potentially as an exit point. Nice and easy one. Very nicely extended, that one, the CAD Swiss. So we got down to the 20 level on that one. Very good extension. Not often we get down there. When we do, it's very rare we don't get the bounce. Had an accumulation there. So that one flagged for quite a while. So, well, as you can see, I've got into it. Got into it there. Got into a few positions. That's not updated properly either. Oh, this is from the old version of the indicator. That's why that's all on there. I'm going to have to manually clear all that off, I think. Bear with me a sec. Blimey. That's a lot of orders. Okay. So yeah, so you see that trade I got in, that one there, was 2 positions. and exit there. So got in on the first extension below 80, got in the second extension and out there. Right, CAD Swiss, so that's good. The other one we got is Euro CAD. So Euro CAD basically nicely extended to the upside. In short on this one, coming down very, very nicely. Propulsion gap target down there, propulsion gap target down there. So that all looks good. Nice and easy entry. M5 reversal, that was really tight today. Up in that propulsion gap as well, look. So straight up into propulsion. Sellers added, looking for it to push back down into there. 5-minute reversal, really tight. Good entry. So lots of propulsion gaps on the 5-minute to aim for as well. That's good for targets for the downside. Half an ADR roughly on that is 40 pips. That propulsion gap target, which is the closest, is 52. So nice, easy drop on that one, hopefully. Pound CAD. Extended to the upside. Got into this one yesterday. We've had a little bit more of a push up yesterday. So this initial trade yesterday was on that RSI extension there. That was off the back of the CPI news for the pound. We started a reversion, didn't quite get out of it. If you were on ADR, you probably got out of that on an ADR. No, it's still in that pound CAD as well. So the ADR didn't even move a third of an ADR down. So didn't quite get out of it. Second entry will be if we get a push today. So that is the previous week's high. We've got that pre-high as well up there. So somewhere in that region, if we can get anywhere near ADR today, there's loads of highs there. Look, so be looking for some kind of push back out down into this propulsion gap. We've got this big one down here as well. So potential for this one today, US dollar unemployment will affect the Canadian dollar. So when we get news on the US, that tends to affect the CAD because they're close trade partners and vice versa. So there's a good potential for this one to drop today as well. If we get positive news on the US dollar, we'll get positive movement on the CAD, which will obviously bring this one back down too. So good potential entry on that one. It's only just extended now. It's come out of extension. The best entry was yesterday, which is what I took, but obviously didn't play out. So just waiting for a second entry on that one. So going over to the 4 hours, US dollar CAD. There's yesterday's low. Should have stayed in that. Never mind. There's yesterday's low, so just be careful down here. There is potential bounce point coming up. Limit orders will trigger at yesterday's low. So we could get a bounce back up into this area. Time was that candle? 9:05. So this was the initial open candle. Yeah, I mean, that is potentially a target, but we are starting to get some limits trigger down here. So if you are in a short on this, might want to take some profit off. Right, 4 hours. US dollar CAD, that's extended on the hourly. Has got extended and embedded on the hourly yesterday. This is the one that I'm hedged on. So I've got a buy and a sell on this at the moment. The buy order. So ideally, what I would love this to do is to push up into there so I can TP on the buys basically. And then as soon as it gets up to there or up to ADR today, absolutely tank on the news. Get me out of the short as well. That'd be perfect. But either way, I'm going to make some money on the US dollar CAD today because if unemployment goes up or down, I don't care. I win. So there you go. So 4 hour RSI extension, only just extended on the hour, on the 4 hour. As you can see, we're in a big downtrend on this one at the moment. Looking for that to reverse really. So the US dollar CAD at the moment, if you look at the buyer scorecard, is a buy. From a fundamental perspective, we just haven't had that strength in the US dollar, and we've had that strength starting to show through a little bit in the Canadian dollar with the oil pricing, although that is starting to come down now. So, so this is fundamentally at the moment a buy. The market is positioned long on it. There's everything going for US dollar CAD. So as you can see, we've got down to a fairly decent support area down here, which is where we've got this bounce. There is potential for it to come all the way back down to this monthly low as well. So tricky one. Obviously with fundamentals and everything, it's long term. It's 6 to 12 weeks is what we're looking at with fundamentals like the COT. So all we've had really is a good 2-3 weeks of drop. So you would expect now for them to correct that in the same way as they kind of did that move there. So it's going to be key unemployment this afternoon as to whether or not that actually happens. So we'll be waiting for that to come through this afternoon. And if we get some decent movement on that one, on the decent figures on the unemployment, then we'll get a nice big pushback to the upside. Pound New Zealand. That's big extension off of the back of the news yesterday. Already short on that one. So just waiting for a profit take move to come back down. This is a really strong, really nice even trend, this one. So you can see the market structure on this is absolutely textbook. If you wanted to sort of give a definition of what market structure is, there it is. So really nice, big, strong move on that one, mainly based off of that New Zealand dollar weakness. There is potential for this one to continue this move as well. However, as long as it continues the movement as it's been doing, you can kind of do what you like with it, trade it in either direction, because it's really, really nice and orderly. But the pound obviously has had strong CPI numbers, which means it's going to put more pressure on interest rate rises. The New Zealand dollar has just had inflation figures reduced, which means it takes the pressure off of interest rates. So the bias on this one has got a good chance of maybe flipping a little bit more long. So it'll be interesting to see what happens when we get up to this high. So this is a very old high from back in October. So that level potentially is where we're going to head to and going to find some resistance. So we've got roughly 150 pips, which is an ADR. So if that pushes up another ADR, that's potentially where I would expect the limit orders to start triggering and then start some kind of pullback move somewhere around here, back down into there. But yeah, pushing very nicely at the minute. Pound New Zealand, pound yen. So this one's been pushing for ages, got shorts on this. We're still waiting for some yen strength to come through. It looks like the yen is starting to power up slightly. Morning, Steve. Didn't see that. So it is starting to power up slightly now, the yens. If you have a quick flick through the yens. Yesterday, we had a nice big drop. We had a drop on Tuesday as well. So although it's pushed up on Wednesday, it's pulled back as well. So we are getting some movement starting to come in on the yens out of that New Zealand dollar yen, as you can see today. So that one's already out. Pound's a little bit different because of the news yesterday, but so it's stalling. So this big strong push that we've had is starting to turn into kind of a rounded top. You can see there's quite a big drop happening this morning on it. So the pound yen obviously had really good news yesterday on the pound. It managed to undo all of that. So this is what I mean by the yen strength that's coming through at the moment. We're seeing the yen able to batter whatever currency it wants to back down. And we've got lots of news that keeps coming out from Japan about the potential for intervening again. Although it said it's not going to do anything in April, which is fine. But that means when you hear things coming out of Kuroda and out of Ueda now, and out of Japan, it's always a precursor to them actually doing something in a while. And it's normally a few weeks after they start talking about it, and they started talking about it this week. So I think there's good potential for this to strengthen up. The market will know that as well, and the market will start to be less bearish on the yen, which means if we get a currency that suddenly gets a bear run for some reason, it gets bad news or something like that, the yen will probably pound it down into ADR. So we'll get some quick drops, I think, coming through on these. At the moment, the RSI extension was yesterday on the hourly, but as you can see, I've been from all the way back here, back at the end of March. And since then, we literally haven't had a decent move. I had opportunities to get out, which should have been out. This trade here, this should have been an exit, and I'm not quite sure what happened. That initial trade, and then that exited that second entry. But for some reason, that one didn't get closed, and I still haven't got to the bottom of it. I've got a feeling it was server overload, and it didn't manage to trigger the sequence because I think at the time I had 8 MT4s running, pretty much every pair on them. So I've got a feeling that's probably what that was, which you need to be a little bit careful of. So I wouldn't actually have been in that one, but I would have been back in anyway here. So regardless, this position onwards would definitely still be in it. So the average would be ever so slightly higher, but not much. So it's pretty much the same trade. So yeah, so waiting for that one to come down. 4-hour RSI extension on that one, as you can see, got above the 80 level, very nicely extended. We will get some kind of pullback from this level, which we always do. It's a case of how deep is it going to be. So for me, I need around about, I guess, 175, 200 ADR really to get out with a nice profit on this, which is very achievable. Couple of days, couple of weekdays on the pound, couple of strong days on the yen. It's done. So it's just a case of waiting at the minute. But look at all these targets to the downside. There's so many areas to the downside that we haven't tapped into yet. So yeah, all looks good. All looks good for shorts. So that's pound yen. All these others are yens as well, apart from the Aussie New Zealand. So euro yen, again, 4-hour RSI extension. There's a big one there. Nicely embedded. So we've got divergence building across the RSI as well, which is all bearish. Again, the yen, whenever you're trading the yen, it's always a waiting game. And you always get these big, strong moves, which last for usually a couple of days at a time. But when it's weak for a long period of time as well. So the yen's one of those funny pairs. You get squeezed on it a lot, but you don't get squeezed badly. What you do is you get squeezed over time. You tend to get, when you get into yen pairs that don't play out, you tend to sit in them for weeks, but you don't tend to get huge, strong pushes against you, this is typical of it. So there's nothing you can do about it. You just have to wait for them, which is why a lot of people don't trade the yen, because it is a pain in the backside. So is the Swiss franc as well. Swiss franc does very similar things as well. So, but yeah, waiting on that one. So that's nicely extended on the 4-hour still. So you can get into that anytime. You will have been in it already probably by now though. So hourly RSI extension was yesterday. So you had an opportunity to get in on an H1M5 reversal alert yesterday. That one probably would have played out. Actually, the entry was there, so you had 50 pips out of it. So that, for me, that would have been an entry, an exit as well. So 1 in, 1 out. Swiss yen, again, RSI extension to the upside this week was yesterday. So there was an entry there yesterday. I'm already in it from back here where we got extended. And again, this is the same thing. The Swiss yen and the euro yen, if you look at the two, yeah, look at the price action on these two. So that's the euro yen. That's the Swiss yen. Yeah. So again, very, very similar to some of these other pairs, like when you trade some of the Aussie pairs and some of the New Zealand crosses as well. They do very, very, very similar things. Australia and New Zealand, close trade partners, Asian session, Euro, Swiss, close trade partners, London session. So these two will move similar. So when you're looking at exposure, you need to kind of class the Euro and the Swissy a lot of the time in the same boat. So if you go short Euro Swiss and pound Swiss at the same time, they're usually going to do the same thing. If there's news on the Euro, the Swiss will react. If there's news on the Swiss, the Euro will react. So these are both basically the same trade. But 4-hour RSI extension, there's a big extension there, as you can see, and all we've done basically is diversions. We've not really gone anywhere down to the downside. So target is back down here. And again, waiting game on the ends. Aussie dollar, New Zealand dollar, really extended. So this is the New Zealand dollar. News. So big, strong push, Aussie, New Zealand, obviously. Whenever you get any news with the Australian or the New Zealand, the other one will usually go with it. However, the Aussie will always overpower. So that's a nice looking short opportunity. I've got a sell on up there. I've also got another position on it. So you can see we're nice extended above there. We'll get a pullback on it, but it's whether or not you can get out. So Done some drawdown control on previous position on this one this morning, looking to get down there into propulsion to exit at some point. So nicely extended. There's your reversal alert. It's still pushing at the moment. So 4 hourly target is here. Hourly target is in there. Same place, basically. So we've also got these areas up here as well, potentially. But lots and lots and lots of downside target on this one. So we'll see what happens with that one. Aussie New Zealand can get into a little bit of a squeeze situation because one of them, when it takes over, really tends to push. At the moment, it is neutral, so I don't see a problem really trading in either direction. At the moment, you can see the market is shorting it, therefore we want to be longing it. So it's pushing up at the moment because retail is all currently the other way. 91% of the market is shorting Aussie New Zealand at the moment, so therefore it's pushing the upside because it needs to go and get that liquidity. So there you go. So there's all your RSIs. So there's a few opportunities there, not a huge amount, and a lot of that is already in because the market's been doing quite a lot of sideways movement. So there we go. DAX has just broken the lows and ADR. Why didn't I hold that today? Oh, after yesterday's DAX, I decided not to do it today. This is the problem with the ORB EA. It's a long-term edge. And if you don't play all of the days, you miss these ones. Anyway, so there you go. The opening range breakout today was a however many to 1 R. So the actual 5-minute break was there. OLT's there, sorry, yeah. Whoops, wrong way again. So opening range 2, if you took the 5-minute opening range, which is one that most people tend to take, you got 4R on that today. Very nice. God damn it. Why didn't I take that one? Never mind. Right. There you go. That's everything covered. So anybody got anything else they want to look at? Any other pairs? Would you ever launch the Trade Manager Dash as an app? No. No, I don't do apps at all. I don't agree at all with using your phone in any shape or form for trading. Because everybody that tries to use a phone trading is trying to become a millionaire and a Lamborghini. So you're better off just stick it on your computer and use a VPN to connect. VPS. Yeah, no, Road Desktop. Something. No, I never thought of doing apps. I'd have to pay someone to do it. So yeah, I could do it. But I got 83 people in here at the moment. It's probably going to cost me a couple of grand to develop an app. So not really a big money spinner, is it? I wouldn't use it either, so. DAX broken through yesterday's lows. Where next? Right, so let's have a look. Right, well, when you've got earnings fortnight, it's wherever it wants to go. So they're obviously selling hard on the DAX at the moment. So if we look at the DAX stocks, so who are we losing today? Let's have a look at changes. Wow. Continental. Not sure why maybe they supply tires to Tesla. I don't know. BMW, there you go. So Daimler, Volkswagen, Porsche, you know, this is what I said when I was talking about sector purchasing. Yeah. So these guys are all losing a lot of money today. Yeah. Tesla has had bad earnings and pretty bad earnings as well. Not just a miss, a massive miss. So all of the motor stock sector is being sold off, because if Tesla have had a bad quarter, it's highly likely the rest of them have had a bad quarter as well. So when you're looking at the stock market, the institutions, the pension funds, the hedge funds, they don't buy individual stocks. They buy stock sectors, and you'll find out there. You'll find things like sector heat maps. So institutions use sector heat mapping. This isn't sectors, but it's a similar sort of thing. So rather than being broken down into individual stocks, you can see here we've got technology. So these are the top tech stocks. You've got financial, where's the motor? Semiconductors, healthcare, banks, insurance. Oh, this is the S&P. There's not a lot of... where's motor? I can't see it. But anyway, you'll see a heat map like this, basically. So what the institutions tend to do is they buy in sectors. So they will say, we want to run a pension fund. So to diversify risk, we will put X% into motor, X% into healthcare, X% into tech, X% into the S&P 500, X% into the Forex market, X% into whatever. So when you have one stock, which is a leading stock that has a massive miss on earnings, it's a massive red flag that the motor industry is suffering. Therefore, you get a massive sell-off on the motor industry. These 5 stocks make up a large portion of the DAX. Therefore, the DAX is dropping. So you're going to find tech stocks. When this happens to tech stocks, you'll find the tech NASDAQ will drop dramatically. And all tech stocks will drop at the same time. So this is what you're seeing. So when you get this kind of thing happening, it's very difficult to tell which way it's going to go and how long it's going to go for. You can tell which way it's going to go usually, obviously, because if it's a massive miss on earnings, obviously it's going to go down because they're going to pull out the stocks and put it into a sector that's performing better, which is exactly what they're doing here. But you don't know where it's going to go. How much selling is there in the market? How much stock do they want to get rid of? How worried are they? It's impossible to tell. When you see a sell-off start like this, it encourages other people to sell off. Therefore, the sell-off becomes faster and harder. Trying to catch this thing, impossible. So all you can really do is look at trying to get on a pullback. But pullbacks tend to be more flags than pullbacks. Yeah, so forget fib. If you were looking at a pullback on this at the moment, and you were going to use a fib, I would say concentrate on the 38. That's probably the strongest pullback you'll find today. But when this move ends, when the sector sell-off finishes, it will quite possibly go into an accumulation. And you will find that the market this afternoon, when New York opens, will be so exhausted from the massive sell-off that it's had this morning, that there won't be any volatility left to execute in the New York session. The New York session will just be a whipsaw sideways. So this afternoon might be a tricky one for opening ranges. But yeah, no idea where it's going. You've got to look at obvious support resistance levels. So this level here is very strong. This level here is strong. So where we are right now, 125, which is what we've rejected, that is potentially where we might find we get a bounce. But very tricky. You can't tell because obviously the market is spooked. So and obviously the DAX as well, when the market sees things like this happening, you've got things like this gap fill open. That's going to get filled. 90% sure, 95% sure that is going to get filled in the same way I thought the oil gap fill was going to get filled. Yeah, it just is it's just a force of nature in all markets. The market doesn't like inefficiency. This is an inefficiency. There are orphaned orders here from institutions left to the wrong side. There is only a certain amount they can stand it before they will either drive it back there or wait till it gets close and then make a push for it. So tricky one. Look at oil. Yeah. What did I say about the gap fill? When we got up to here, I was like, this is going to fill. This is beautiful. And then we went sideways for 7 days and I was like, right, well, we broke the highs. Maybe we're not going to fill the gap. and then we started stalling. So we went basically price discovery. No, actually, we don't want to be trading up here. We want to be trading back down. And that's where I said to get short, wasn't it? Because it's not a technical analysis or anything. It's pure fundamentals of the market. We fill gaps. As soon as I saw that going short, I was like, that's a short. And as soon as we break that low, we're going to collapse down towards that gap. And it's exactly what's happening. And it happens all the time. It just happens. It's just one of those things. Nobody really knows. Well, people, there's all sorts of reasons why, but nobody really knows why for sure, because nobody understands 100% the market because there's too many participants. But it's to do with people just getting offside. Yeah. Like me, I was sitting here, wasn't I, saying, right, brilliant. We've got the new market structure in. We're going for that $95 a barrel. Next pullback, I'm going to long it. If I hadn't had got in short there on that pullback, I would have been one of the orphaned orders on that gap going, Christ, I'm really offside on this. When a bank or institution is really offside on something, they have the power to push it back down. And this is what happens with the gap fills. The participants that are caught offside rally together to drive price back down to get themselves out of those positions. They're position trading, don't forget, the banks, institutions. That's what they do, the same thing as we do. So that's why these things happen, why they get filled. So there's an opportunity today. This is 175 ADR, either today or tomorrow, potentially off the back of the unemployment claims, of that getting filled. So I've got short on that at the moment, which is, nice in profit. So same thing with the DAX. We are now en route, potentially, with those earnings to that. The other thing you've got to bear in mind is with these earnings, there's more to come, obviously. So where we are here for Procter & Gamble and SLB, next week we've got nothing particularly exciting, Coca-Cola and Activision. Activision's still going. McDonald's, Pepsi, Spotify. So there's a lot of, it's mainly tech next week. Yeah, next week is vastly tech. So NASDAQ, but all stock markets drive the others. So if we get the NASDAQ suddenly dropping on bad earnings, obviously that's going to drive down the DAX as well. So we could be starting a multi-week drop. About time. It's been rallying long enough. Yes, thumbs up, as someone's just said. Let's get a thumbs up. We got 98 people. Thumbs. Pound US dollar. We haven't looked at pound US dollar. So pound US. At the moment, we're bang in the middle of nowhere. Look, there's just no extension in any direction, shape, or form at the moment. 4 hour, bang in the middle. We are just sitting sideways. So this is going to be driven this afternoon by the unemployment figures. We got this gap up here, which is kind of filled virtually. So I would say almost done, that one. At the moment, we're just pulling back down into this propulsion. We've got this one left back down here as well. So where you are at the minute with this is kind of in no man's land. There's more downside targets than there is upside targets on it. So I would say we'd be looking more for fills to the downside on this. Based on US dollar strength. So as you can see yesterday, we had the CPI figures for the pound, which was bullish. So it rallied the pound across the board. The US dollar slammed it straight back down again. The pound tried again, the US dollar slamming it back down again. So it looks like they're buying into the unemployment claims this afternoon, which means that we might get bullish figures. And if we get bullish figures, this thing's going to come down quite hard. But it's going to do one of two things. Yeah, don't know which. So pick your bias. At the moment, there's no, as you can see, there's no trades on this because it's flatlined, it's sideways. We haven't had an RSI extension strong enough, apart from this one here, that trade there, to get out of it. So had two shorts there. But yeah, nothing else. So sideways. Don't know, pound US dollar. Whichever way the unemployment figures go this afternoon, up or down, that's what's going to drive it. Quick look at these pounds. Yeah, so the pound's not particularly strong this morning. It's not particularly weak either, but that US dollar is very strong. So again, when you sell, remember what I just said about stock sector purchasing, yeah? When you are a pension fund institution and you've got long-term investments in the stock market and you decide to withdraw that pot of cash from the stock market, you've got to put it somewhere. Yeah. So you either move it from one sector to another sector. However, that will overexpose you on whatever sector you're moving to, likely, because you'll probably have you'll be in every sector a lot of the time with different percentages. So when you're moving money out of a sector, you've got to put it somewhere. So if you need to put it somewhere nice and safe because you're not sure where to put it, where would you put it? Where is it going to earn the most interest, your money, at the moment? Yeah. Where has just said that they are going to increase their interest rates further? So why do you think the US dollar is rallying today? Because everybody's pulling their money out of the motor industry and needs to put it somewhere. That's where it's currently being placed. Doesn't mean it's going to stay there. And we've got potential for positive unemployment results today. We had negative last time. So we've had an interest rate rise since that figure. Potentially that could go up again. But so that's basically what's happening with the US at the moment. So we've got a little bit of a stronger US dollar moving into the unemployment figures. And it's likely because they're pulling it out of the stocks and just placing it somewhere nice and safe. Again, this will often help the yen. When you get a sell-off on the stock market, the yen will often power up because yen is a safe haven currency. So if you have to put your money somewhere that's unlikely to get affected by huge swings in price, that's where you're going to put it. So again, the yen benefiting this morning as well, which is good for us because there's lots of people short on the yen at the moment. So yeah, so I don't know about the pound US dollar at the moment. Rajiv, I remember you stating passing a prop very quickly. Is that using mean reversion ADR with 0.5% risk? I was looking to see which video it's in. No. So when I passed the A8 evaluation in a day, that was scalping. So what you just saw me do there with the price, I basically used the Price Action Toolkit and get in and scale in. So the way to pass prop very quickly, I'm just going to reduce this risk down. I'll just show you what I do. 0.1 risk and use previous candles low, I think, on this one. So I'm using the last candle as a stop, yeah, and go long on a break, right? So buy stop above the high, stop loss below the low. TP should be way bigger than that, somewhere up there. So all I do when I'm trying to get past a prop evaluation very quick, right? Just so where we are at the moment, we're extended, yeah. So one or two things is going to happen. We're either going to get a flag break short, or we are going to undo this move with a big pullback and then drop. So all I typically do is try and scale into a position. So get into a position, and then as it starts to go my way, I will just buy some more. And then as it goes my way, I'll buy some more. And if you're scaling in with 0.5% or 1% a position, and you get 3 on that you get a sudden push from, that's an evaluation pass. Yeah. And it can easily happen within an hour. So remember, every time you get into a trade, the odds of it working out are 50-50. It's either going to go in your direction or it's not. So if it doesn't go in your direction, you're likely to get stopped out pretty quick. If it is going to go in your direction, you then have to worry about how far. So the fact that it goes in your direction means you can make a profit, but it doesn't mean you can make enough profit to pass a proper valuation. So what you need to do then is when it starts to go in your direction, scale in, add more size, so that if this is the one you've got right, the size will make you pass the proper valuation. So all I did was I traded the DAX in the morning and I got onto a short. It wasn't an elevator shaft like this. It was a trend. So what I saw was that, but I saw it on the opening range breakout. I took it, then pulled back, and then I took a break, assuming the second leg was going to make a new low, which it did. Then it pulled back, and I was like, right, well, let's go for another leg. So I took another entry there. So I added 3 positions on, looking for a break of that low, and it happened. That was 8%. That's my valuation passed. 2 hours, 1.5 hours or something after the open, I was done. I then did the same thing in the NASDAQ in the afternoon. Exactly the same thing. We had a nice trend day in the afternoon. And I did the same thing in the opposite direction on the NASDAQ and passed. And then I was funded in the afternoon. Because it's only a 5% target as well on stage 2, don't forget, not 8. So, but it's luck. I was over leveraged. Yeah, I was going in with 1% risk on a position. So if you put one trade on with a stop, yeah, at 1%, and you got 8% to pass, you need an 8 to 1R. So if you want to reduce your target, once you get into that position, add a second position of 1%, you now only need a 4R. If you add a third position, you hardly need any more movement to get out of that trade with a profit. But you have to have a trend day. If you get a whipsaw day like yesterday in the NASDAQ, I got in the DAX yesterday morning, I got destroyed. It's luck. Yeah, and this is what I keep saying about prop. Whether you and somebody asked me in the Telegram group yesterday, and they actually sent me a voice message in Telegram. Someone spoke to me. Basically asking, with the ADR reversal strategy, it works very, very well, has a very low drawdown most of the time when it's working well. We did 26% on it last month, and it had less than 5-6% drawdown. You could make easily 5 or 10 grand a month out of it with a reduced risk on it when it's working well. However, if the day you take your first ADR reversal is the day that a squeeze starts in the opposite direction on a fundamental shift on the currency that you decided to take that ADR reversal on, that could go into 5% drawdown within 2 to 3 days. There's nothing you can do to guarantee passing or failing any kind of proper valuation. However, the odds, if the market conditions are right, of it working out for you, are always going to be 50-50, aren't they? It's going to go up or down. So right now, short look, if I go short here, TP still way too big, too small even. Get to that. So yeah, so there, look, so assuming this is going to be a flag, yeah, if I get into an entry there, TP out of the way. Yeah, so if I get into an entry here, so one of two things I see is going to happen here. It's either going to do that, or it's going to do that. Flag, break. So the short play is to take an entry when we break that low, and then as it pushes down, take a second entry on a breakout of that low there. So then I would have 1, 2 positions on, and hopefully we get a nice strong push. If I was trading with 1%, which I'm trading with 0.1 here because I'm just demonstrating a point, and this is a proper valuation, so I don't want to muck it up. If that was trading with 1%, by the time we get down to here somewhere, that will be in somewhere in the region of 3 to 5% in profit. One leg. One leg. If you get a second leg, that's all you need to pass. Very, very easy to pass prop on a trend day. On a rotation day, very, very difficult, because by the time you've identified it's a rotation day, i.e. a range, the range rotation has usually played out and you get a break, which means you fail those trades. So it's much easier to pass evaluations on a trend day. Trend days happen 2 to 3 times out of 5. You don't know when they're going to happen. So again, it's all down to the luck of the day that you start the evaluation, when you take your first trade, which you catch. If you catch the opening range breakout on a trend day and you just add to it a couple of times, you will pass evaluation every single time. Every single time. If you get the morning the DAX goes into a flush like this, and if this afternoon it goes into a flush either like that or flushes the opposite direction and undoes what it did this morning, you'll have passed a valuation. It's not in your control, is it? There you go. So we're short there at the moment. So what I'll do is if I drop up to M15 and take a sell stop on that last candle, stop above the high of this candle. Yeah. So second entry is going to be there. Stop is there on both positions. If this now flushes down and does another leg, i.e. this is a flag break, when you get down to the bottom of that flag break, you're likely going to be in somewhere between 3 to 5%. That's all you need to do. 2 trades. 2 to 3 trades like that and you're done. So that's how I pass the EA evaluation in the day, and how when I need fast funding, i.e. I've had a bad result and I've blown a few accounts and I need to get some accounts on board fast, that's how I do it. High risk, over leveraged, not going to work all the time, is it? But there isn't a video about it, so there you go. There's the video about it. Keep hearing about VPS. Don't know what they are. Yes, I know. Google it. There you go, Henry. Virtual personal server. This is a VPS. So it's just a computer on a cloud where you can put your MT4 installs with your EAs running so that they don't go wrong. Basically, all of VPSs. Tesla dropping price so German car manufacturers will feel pain. Yeah, exactly. How is gap filling fundamentals? I don't know. Did I say gap filling was fundamentals? Did I? Not really. No. Gap fills are more just a kind of force of nature, a thing that happens. It's not to do with fundamentals. It's to do with the way that banks operate, basically. Oh, look, Helpy FX is back, everybody. Thank you for sharing Helpy FX signals at last day. I didn't share them last day, direct. Bot. You know I didn't, because they're a bunch of con artists. I Googled them and found their free group. Their free trading signals are so precise, highly recommended. Thank you. They've got a 95% strike rate. And they make you 21,000 pips a month. Let me just block them 1 sec. Report. Unwanted commercial content or spam. Is there one for scamming? No. Bye-bye, Helpy FX. Nice of you to drop in. There we go, they've gone. But if you do want to go to Helpy FX, here you go, I'll give them a plug. Please don't join their free group. I use this opportunity every now and again when they pop up to explain to you how ludicrous. Oh, they've changed their content. They've removed all their results. Right, no, they've still got them there. They've just reformatted them. Look. The free group has 75 to 85% strike rate. If that was the case, Warren Buffett would have employed these people many years ago, because no one in the industry has a 75 to 80% strike rate. Average yearly profit, 3,900 to 11,000 pips. That's quite a big variance, isn't it? And what is 3,900 pips? That's one trade on the US dollar ZAR for 5 minutes. You'll make about 4,000 pips in 5 minutes if you trade the ZAR. So there you go. So utterly useless reporting, utterly ridiculous claims. 300 to 1,000 pips monthly profit. I've made 300 pips in a day. That's rubbish. They're absolutely terrible. New people fall for this stuff, don't they? But anyway, there you go. There's Helpy FX. Go join them. Lose money. Right. Carry on. Oh my God, they're still here. I thought I just got rid of them. I just thought I'd hidden them on the channel. Will I add them as a moderator? There we go, they've gone. How is Gap fully fundamental? Sorry, I've covered that one. Morning, Brian. Morning, Olani. Morning, Anna. Morning, Andres. So I'm late. I made it. Good morning, David. Can you explain initial deposit loss on prop? Sad taste. Any trades taken? Yep, loads. Can you explain the initial deposit loss on prop? I don't know what they mean by that. What's initial deposit loss? There you go. Too short. Let's cancel those pending longs. I don't know what that means. On the E-dash. On E8. Initial deposit loss. I don't know what that is. I guess what they mean is whatever. So the initial deposit. So if this is a 25k account, yeah. So the initial deposit is 25,000. The initial deposit loss is your drawdown, isn't it? Your realized drawdown, I guess. Go and have a look on their blog, but it's all it will be is drawdown, won't it? It'll either be realized or unrealized drawdown. There you go. So that's 1% in profit now. So assuming that we'd taken that with a 1% risk, you would now be 1% in profit. So you get to roughly 2%, 3% on that one leg. That's what I mean. See, if you get a 3-leg trend, that's enough to pass an evaluation. And a 3-leg trend on the 5-minute chart is going to be around about an hour, hour and a half in time. That's all you need, one session to pass. With people like EA, obviously. Right, that's all I've got for you today. I haven't got anything else to look at. I need to go and do some more work on this indicator. I'm hoping all those lines on there were because they were different. It was a different version of the indicator before, but anyway. Could you please put the help fix link in the chat? Help fix? What's that? I don't know what you mean, Fabio. Do you mean HelpyFX? No, I'm not putting HelpyFX's link in the chat. Please don't tell me you're seriously... After what I just said, you're not seriously considering joining them, are you? You're not that silly, are you? Hopefully. It's a con. Yeah, the reason I muck about is because they spam every single live stream out there, and they basically are a big con artist. They will steal all of your money and run away with it. So I'm not really interested in promoting them in my chat. No. Sorry. My face should say it all. Did you think I was being serious? Okay. This guy, John Wick, right? He knows. Steve, stop talking. What are you talking about? Stop talking in the wrong window. Who are you talking to and what are you talking about, Steve? This guy has got more chance of getting a strike rate of 85% in FX than HelpyFX has, all right? So do not use HelpyFX. Just to clarify, HelpyFX are a con artist website selling falsehoods about Forex profits that they don't gain, okay? I have joined their free group. The signals they put out look very accurate historically because they change them after the event to make them look profitable. The entry price they give you, you get in at, and then they give you the result with a different entry price. They con you. Do not join them. 99% of signal services do that practice. You don't find out until you've paid for the signal service. By then, it's too late. You've paid for the signal service. Signal services don't work. Learn to trade. There you go. There is my public service announcement for anybody new to the Forex industry. Brian's not here. Otherwise, he would need his towel, probably. Some people don't get humor, I know. No, but some people also are very, very new to Forex. I remember I've been stuck into it all. Yeah, I've bought courses. I've bought all sorts of stuff. I've been in signal services. I've done it all. That's why I know it's all a load of rubbish. So we're talking on WhatsApp with my business partner about outgoing XML feeds. That sounds fun. I'm from Brazil and Google Translator to talk to you. Okay, Fabio, no, that's fine. So translate this. Helpy, hang on. I'm just trying to do something clever, and now obviously my computer's gone. No, don't want to open that. There we go. Let me just get...
FX are a scam and will steal your money.
There you go. That was the devil himself telling you not to go and use Helpy FX. Morning, Stuart. How are we doing? Keen to see what oil's up to. Oil's starting a little bit of a pause on the drop. I'm not sure we're going to get there today. I think this is a little bit keen today. 175 ADR. We might do. We'll see. But we're nicely extended on the hourly now, so I think we're more likely to have a pause. 4 hours all over the place. Look, we're more likely to get that sort of action, and then have a run for that as a second leg like that. So I think we may struggle. If we can get to ADR today on oil, that'd be very nice. I'm going to hold it. I'm break even on it. So can you define the gold spot? What is this? Translator day? What's the gold spot? Can I define the gold spot? I don't know what you mean. I had to get John out there. Gold spot. Do you mean gold? And do you want? Are you asking for analysis on gold? Is that what you're saying? I don't quite know what that means. But anyway, I'll assume you want analysis on gold. I have already done it. But gold is a US dollar cross, obviously. So whatever happens with the unemployment claims this afternoon is going to have the opposite effect on gold. So if we get negative unemployment. I know what gold is. I know it's XAU USD, but you just asked me to define the gold spot. You didn't ask me to analyze it. You asked me to define it. That doesn't mean anything. So yeah, so I've just been pedantic. I'm bored. I'm waiting for the market to move. So unemployment this afternoon is either going to drive it up or down, one or the other. So really depends on what happens with that, really. So I would assume at the moment we're going to go sideways until we go news. So the news will drive it one way or the other. You've got your equidistant at the moment between propulsion gaps. So there's a target to the downside. There's a target to the upside. We're bang in the middle of it. It really is impossible to call at the moment which way it's going to go next. Obviously, this getting there and getting there could take anything up to a week or two. It could also hit it in a day. It's 150 ADR in either direction. So you're bang in the middle of 150 ADR moves. However, we've had a big, strong rally on gold because of the US dollar weakness and the safe haven runs with the banking crisis. So there's all this targeting below to aim for. We've got a little bit of a gap fill as well, although it's very old now. So, you know, it looks more like that than that. However, it really depends on what happens with unemployment. If unemployment goes, if unemployment claims are up, meaning that the unemployment rate is up, that is going to be negative for the US. So we'll see gold push, but it will also mean that it will take off the inflationary pressure on interest rate rises, which means, again, it's possibly more negative US. So we could find a situation where, and this is where these propulsion gaps, where they're caused by strong movement, this is a fundamental rush on safe havens. We don't necessarily have to undo this, because this was caused by something like a safe haven run, and then the US dollar weakens because it's hit its terminal rate on interest rates. Then we're going to push all the way off to the highs, aren't we? So it may never come back down here. We do have that happening. If you get a fundamental reason to move the market hard, and then you get another fundamental reason straight after it to move it hard, that's where you get orphan propulsion gaps. So it's impossible to tell with gold at the moment. The US dollar is on a real rickety bridge, not knowing whether we're going up or down. About UBS have just upped their forecast to 0.25% on the pound in May. So it looks like we are definitely getting a 0.25 minimum. I say potentially we could get a 0.5 as well. So again, bullish pound. Tesla shares dropped 6.5% as Musk signals more price cuts. They're struggling, aren't they? Not good, Mr. Musk. More bullishness on euro. We didn't look at the financial juice feed this morning, did we? So double bullish euro. We got a May rate hike coming. They're now saying June and July, possibly more rate hikes as well. So looking at the fundamentals on this, we've gone with a 0.5. That takes us up to 4.5 potentially by summer. That's bullish euro. And the fact that inflation is coming down at a rate of knots, that would really slam inflation down. Unemployment is ridiculously high, so they've got to be very careful with this. This is why we're lower on the euro interest rates, because their unemployment is at ridiculous levels, and higher interest rates cause higher unemployment. So they've got a very tricky balancing act in the eurozone at the moment, but potentially more bullishness euro. Euro CAD's having a little bit of a push. Oh, I'm here. Towel saturated. Brian's there. Yeah. Good morning from California. NASDAQ down to 122.90. Quite possibly, yeah. Off the back of Tesla. 122.90. 122.90. That's a long way down. Not really see any reason why it would go to 122.90, but yeah, down definitely is on the cards. I'm still not convinced. I need to put that indicator on. Yeah, I'm still not convinced that this is a bull run still. This is just not, it's just not strong enough at the moment. We're struggling, really struggling to make these new highs. When we get back up to there, I've got a feeling we're just going to sort of go into a little bit of a stagnation. So I can see definitely a drop on the NASDAQ, but especially after today. Be interesting to see what New York does. New York could easily take this down below last week and the previous week's low today, I reckon. Could be a big old sell-off this afternoon. Brian, what the hell is going on? I found a new feature in my microphone that allows me to replicate lots of different voices.
So I can become things like synth robots and sound like I'm from the 80s and 90s when we did all that synth robot music. What the hell is that?
This is called a witness protection. I imagine my voice sounds like one of those. I don't know what my voice sounds like when I'm not having to hear myself. But witness protection apparently at the moment.
It's all good fun. Down 3.4% on my Forex funds. Phase 2. Eek. Price Action Toolkit looking very tempting. How are you down 3.4%? What have you been doing, Mumo? David, morning from London. Hopefully it's sunny. 12,990. Oh, 12,990 you were calling on the NASDAQ. Right, okay. Well, that's only there. That's within an ADR. That's like saying we're going to move today. Of course it's going to get down there. That's not even ADR. Those two propulsion gap fills probably within the next 2 to 3 hours, virtually guaranteed. Right, I'm going to leave it there because I want to get on with this indicator and try and get this finished off so I can get it done. I've got a load of I've got a load of documentation to write and stuff. So, and screenshots and silly things like that to do. So I'm going to get on with that this morning. There's no more ADRs apart from the New Zealand dollars we've had. The RSIs are as we looked at before, so nothing's really changed there. Sitting in 7.4% drawdown now. Nothing at the moment still. New Zealand dollar Swiss is the main issue at the moment. 3 positions on that. Still not massively far away. And obviously love these big propulsion gap targets on the hourly. So just waiting for some New Zealand strength to come in. But yeah, so there's nothing really getting worrisome there either, percentage-wise. Still banking nicely. So just waiting for stuff to kind of flip. So hopefully the US dollar this afternoon is going to be the main catalyst. So just be aware of that US dollar news at 1:30. I'll be back on at 2:20 for the New York session. We've got no real news this afternoon, but we've got the Macklem talking at 4 o'clock. So there is potential for Canadian dollar moves there as well. Yeah, so I'll be back. I might do a live room tomorrow. I'm not sure. I'm going away tomorrow for a long weekend, so I'm not here. Definitely not here tomorrow afternoon, and I'm not here Monday. I might try and squeeze a live room in tomorrow morning. I'm not sure. I don't think I'm going to have time, but I will see. I've just realised my clock's wrong. Why does that say 7:44 a.m.? Oh, that's because when I refreshed it last, probably. There we go. So yeah, I might do one tomorrow, but assume at the moment, drop the weapon. You have 10 seconds to comply. Is that what that voice sounded like?
DJ robot. That's probably not the right one, is it? That's not the right voice.
I could also be an alien.
That's witness protection, is that it? So no.
I got to stop playing around with it. Probably sounds completely ununderstandable. But yeah, anyway, so I assume tomorrow there is no live room. I might sneak one on, depending on what happens in the morning. But at the moment, I think I'm probably going to be packing and doing other stuff. So assume there's no live room tomorrow, and assume there isn't one on Monday. There definitely isn't one on Monday. But obviously watch the YouTube channel and the Telegram group, and I'll let you know in there. I'm having club flashbacks. I'm going to have to re-listen to this so I can see what this voice changer sounds like. Right. No, I'm not coming to Spain, Steve, unfortunately. I'd love to, but I'm just going away for a long weekend in the UK with the fam. So, yeah. I say, yeah, as in, I'm looking forward to it massively, but it's not going abroad, which would be much nicer. Don't think that DAX is going to play out. But I'm going to hold on to it, see if we can get another leg down. So still a flag break. Then you've got a flag break there. So if you wanted to add again to this, yeah, as we were talking, sell stop under the last candle, add another one. If this is going to be either an accumulation break or a flag break, that's 3% you'd have on short. By the time you get down to there, it's going to be a nice little earner, isn't it? So that is one way you can pass prop. But obviously, it is just literally playing on the fact that you are going to get a nice little trend day going on. If you get one of those days that does that, you're not going to have much fun. Like this, look. So potentially this is turning into a loss if we break that high. But if we break that high, I want to be out because I'm wrong. And then you would want to flip long back up into there somewhere. Who knows? This is why scalping and using stop losses is so hard. It is a totally random thing. So, okay, I'll leave it there. Anything you need, come in the live room, not in the live room, in the Telegram group. I'll be back this afternoon at 2:20 for the New York session. And if I'm not on tomorrow, I will be back on Tuesday next week for the next London session. Okay, so I will see you then. Have a good day.